Lizanne, what are your first thoughts on the implications from an investment perspective?
So, when I was penning the note that we just put into the publishing queue a few minutes ago, I started with the thinking that we could describe this as a dovish hike. But as you got further into the press conference, that seemed to be a little bit less the case. I wouldn't say that Powell was very hawkish, but certainly more so than what the statement read on its own. And really interesting was the somewhat simultaneous release from Yellen saying that there was not they're not looking at a blanket increase in FDIC insurance above the 250, which wasn't in contrast with what Powell said. But when asked that question, he tried to sort of calm nerves and said we basically have the tools. So I think there's going to be a lot of dissecting of that piece of it.
For sure. Yeah, it is worth noting, as you did there, that Secretary Yellen was speaking at the same time at the press conference and made some remarks about no real plans to broadly guarantee all deposits, which is a reiteration, but it seemed like, the market doesn't necessarily always want to hear those sorts of things. So I guess where does that leave us, right? Because on the one hand, you can say as an investor or if you're a trader, well, it looks like maybe they're getting close to being done at the Fed, and maybe they won't have to tighten too much more because of the uncertainty introduced by this banking credit contraction that they anticipate. But then what you have is the uncertainty based on the credit contraction that we're anticipating. And what does that mean for the economy then?
Well, I think it's maybe not as much about uncertainty. I think what the Fed understands is that to the extent this morphs into a credit crunch, which it certainly appears more likely to be the case, it was the case a couple of weeks ago, that is inherently disinflationary. They know that, whether they view this as sort of just one last pop in the interest of not going against market expectations, which had an 83% likelihood of 25 heading into the meeting. But I think they understand that the credit crunch is disinflationary, and probably why he was at least indirectly leaning into this could be it, even though based on what the dots plot show, it suggests one more hike. But he certainly left the door open for a pause and not a hike next time.
For sure. And now I know, Lizanne, you've been sort of thinking in a framework of sort of a rolling recession, different parts of the economy having downturns and recovering, kind of nothing all at once necessarily, at least not yet. Where are we, do you think, in that process? For example, things like housing and manufacturing have been, in downturn for a while. Have they bottomed yet? Are they in the process of bottoming? And what's next?
Well, we are starting to see some stability in the housing data, and that it may be purely a short-term reflection of lower mortgage rates, but given the carnage that predated the current environment, that might be a sign that we're seeing some stabilization in an area that clearly has been in recession territory. But we're also starting to see some cracks on the services side of things. You're seeing some signs of disinflation. You're seeing less wage pressure on the services side. We know that smaller companies tend to have sort of more exposure to smaller and regional banks in terms of not only where their deposit base is, but where they go for borrowing needs. So I think that the potential credit crunch here is likely to have a greater impact kind of down the size spectrum. And I think that's part of why you're seeing the changing nature of leadership in the market with the drubbing that an index like the Russell 2000 has taken, whereas there's been more resilient up the cap spectrum. So I think there's been a quick shift in let's look for where there's strong capital cushions, where there's strong balance sheet, where there's interest coverage. So I think even though the indexes have behaved fairly well, the under the surface leadership changes, I think, are telling an important story about what's next for the economy.